AMD is back in the spotlight, and this Monday could be a pivotal moment for the stock. With the upcoming earnings report, the market is watching closely to see whether AMD can live up to the AI hype or if concerns around export restrictions and earnings pressure will throw cold water on the rally. Let's start with where things currently stand. AMD stock has been on a tear in 2025, up over 40% year to date. A big part of that momentum has come from optimism around its data center segment and the ramp-up of its new Instinct MI300 series of AI chips. These chips are designed to go head-to-head with Nvidia's dominant GPUs and AMD's pricing strategy, offering similar performance at a more accessible price point, has caught the attention of both analysts and enterprise customers. Analyst upgrades have also helped fuel investor enthusiasm. UBS recently raised its price target on AMD to $210, citing growing demand for its AI products. Bank of America followed suit with a $200 target. When you combine that kind of bullish sentiment from the street with the broader narrative of an AI-fueled tech boom, it's not hard to see why AMD is gaining traction. But it's not all smooth sailing. On Monday, AMD will release its second quarter results, and there are a few curveballs that could complicate the narrative. First, the company is expected to report a one-time charge of around $800 million due to U.S. export restrictions on AI chips being sold to China. That's a big hit, one that's expected to push earnings per share down to around 47 or 48 cents, a roughly 30% drop compared to the same period last year. Now, some investors might look at that and flinch. After all, when EPS drops that significantly, it usually raises red flags. But it's important to put this in context. This isn't a case of AMD's core business underperforming. It's more about how government policy is affecting global chip sales, and AMD's taking the financial hit now, rather than dragging it out over several quarters. The silver lining here is that once this charge is in the rearview mirror, the focus can shift back to growth. And growth is exactly what AMD has been showing. In the first quarter of this year, revenue rose 36% year over year. The data center segment alone was up 57%, while the client segment surged 68%. Those are impressive numbers, and they speak to the strength of AMD's product lineup, especially as demand for AI-related hardware continues to climb. Another bright spot is AMD's free cash flow, which reached $727 million last quarter, nearly doubling year over year. That kind of cash generation gives AMD the flexibility to invest in R&D, reward shareholders, or even pursue strategic acquisitions if opportunities arise. But let's bring this back to the bigger picture. The reason AMD is attracting so much attention right now isn't just because of past performance, it's about what the company could become in the AI age. Nvidia has clearly been the dominant player in AI GPUs, but AMD is positioning itself as a serious contender. The new MI350 chips, part of the Instinct lineup, are set to be released in the coming months, and AMD has already announced pricing between $15,000 and $25,000 per unit. That's a substantial price increase over previous models, which suggests confidence in both the performance and market demand. At the same time, AMD is signaling that it intends to compete not just on performance, but on value. The MI350 is expected to offer similar capabilities to Nvidia's offerings but at a lower overall cost to customers. That could be a compelling pitch for companies looking to scale their AI infrastructure without breaking the bank. It's also worth noting that CEO Lisa Su has made it clear AMD isn't just reacting to the AI trend, it's actively shaping it. She recently acknowledged that chips produced in the US will be more expensive, by up to 20%, due to higher manufacturing costs. But she argued that the diversification of production and the benefits of US-based supply chains are worth the trade-off. That kind of long-term thinking, especially in today's unpredictable geopolitical climate, could give AMD a strategic edge. So, what does this all mean for investors heading into Monday's earnings? In the short term, we could see some volatility. Any earnings report that includes a massive charge and lower EPS will naturally cause some knee-jerk reactions. But if AMD meets or beats its revenue target, and especially if it provides strong guidance for Q3 and beyond, that could be enough to keep the rally going. The real question is whether the market believes AMD can close the gap with Nvidia in the AI arms race. And on that front, momentum appears to be building. Major institutions are increasing their positions, analysts are revising their targets upward, and the company's AI strategy is becoming more defined with each product announcement. It's no longer just about potential, it's about execution. We also can't ignore the broader macro backdrop. Demand for AI chips isn't slowing down, and with many companies still in the early stages of AI adoption, the total addressable market is massive. If AMD can secure even a modest slice of that market, the upside could be substantial. Of course, there are risks. If the export restrictions to China drag on longer than expected, or if competition heats up faster than AMD can scale its AI production, that could dampen enthusiasm. But right now, the positives appear to outweigh the negatives, at least from a medium to long-term perspective. So, if you're watching AMD closely, Monday is going to be a big day. The earnings report could provide clarity on just how well the company is navigating both the challenges and the opportunities in front of it. And for those who believe in the long-term vision, an AMD that plays a central role in the AI ecosystem, this could be just the beginning of a new chapter. Keep your eyes on that earnings call. Look for updates on data center growth, MI300 and MI350 ramp-up timelines, and any fresh guidance on revenue and margin targets. If AMD delivers a solid report despite the headwinds, it could mark the next leg up for the stock. Whether you're already in the stock or still on the sidelines, it's hard to ignore what AMD is building. It's not just a chip maker anymore, it's becoming a central player in one of the most transformative tech trends of our time.